So this is my 5th year at LIXI, and in those 5 years, I've seen many members struggle to come to grips with the same challenges time and time again. And the single root cause of these challenges is frequently the difficulty that they all have in executing change, even small incremental change. And I think this cartoon neatly articulates the issue. In essence, the poor technology and process foundations, the manual workarounds and legacy processes and systems actually look a lot like this. And anyone trying to add a new feature on top of it will find it much harder than if those foundations were solid. So just a few weeks ago, I was actually looking for a mortgage and I thought I'd start with my current bank. I was already logged into internet banking and I saw a link to home loan applications and I thought to myself, perfect, this is going to be a great customer experience. I know this bank has spent a ton of money on their digital transformation. I've read about it all over the news, so surely this will be easy. So I click the button and I'm presented with a really well-designed form that asks what kind of purchase I'd like to make. So I select new home. And I'm immediately redirected to another form where the very next question, the first real question I've been asked is, are you an existing customer? I'm literally still in internet banking and this allegedly digital organization is already wasting my time with questions that it already knows the answer to. And just to cement my frustration, the next questions were, what are your name? What's the state of the property? What's your phone number? And what's your email? So despite my frustration, I completed the form, hoping that I'd get to the point of knowing how much I might be able to borrow. But instead, I get a message saying, congratulations, you'll get a call back within 7 days. Now, this really dreadful experience got me thinking. Because during COVID, I've seen so much news about the digital mortgage, like it's been solved. It's all over the mortgage trade media, the social media, and even in the popular media. So is it all this news backed by the real thing? Hence the title of this presentation, Digital Mortgage or Digital Veneer. Why? Well, a veneer is just a layer that you apply over the top of something to make it look like the real deal. A brick veneer home is simply a layer of bricks cladding a timber frame house. Dental veneers cover your teeth to make them look whiter. Wood veneer uses a thin layer of wood over a chipboard to make IKEA furniture. So in mortgages, what do I mean by a digital veneer? Well, I think great social media, slick mobile apps, and a few digital features such as e-signing do not necessarily define the digital mortgage. And my concern is that too many organisations are building these digital veneers rather than investing in the fundamental transformation required to be a truly successful digital organisation. Now, it's become really critical from a marketing perspective for lenders to be able to say that their mortgage offering is digital. But Morse code is digital. And no one would suggest that a mortgage process based on Morse code could be considered digital. I contend that too many of today's digital mortgages are simply old business practices and legacy systems hidden under a veneer of digital technologies. And like any veneer, it can look pretty good and it's pretty cheap and quick to deliver, but it is quite simply not the real thing. And I guess the question is, if I'm doing this, if I'm using a veneer of digital technologies to deliver parts of a mortgage experience, does it matter? Is there anything wrong with this? So in a report on mortgages by management consultants Oliver Wyman, the digital mortgage experience I think is described quite nicely. And I think the key features are, as a customer, I don't want to waste hours filling applications and collecting documents. If you can get the data from other sources, particularly if it's digital and verified sources, it saves me a lot of effort. That's great. I really want to be sure that I'm getting the right product, the right features, the right price. I'd also like instant conditional approval. I want my overall journey to be quick and transparent. It's got to be easy to find out where the process is up to. I do want access to human support if needed, and that's got to be through the channel of my choosing. And I want closing and settlement to be electronic. Now, these are all important if the customer is to perceive the mortgage experience as digital. Now I think back to my user experience with my bank, and they failed at the very first step. Essentially, the first set of questions they asked was something they already knew. And it doesn't matter how well they perform for the rest of the digital mortgage experience, it's highly unlikely that I will believe that they're digitally competent. And none of these features on this slide in and of themselves are particularly difficult. But why couldn't my bank get the basics right? So to answer this, I think there's some really interesting observations that were published in a report recently by KPMG focused on the profitability of the major lenders in Australia. And one thing really stood out to me, and that is that the European banks are way ahead of the Australian banks in simplifying their estate and eliminating legacy. The report highlights some interesting statistics of European banks and how they've been able to reduce their cost base and simplify their technology and product estate. And this is something that the report notes has not happened to the same extent here in Australia. RBS, Lloyds, Santander all show dramatic efforts to reduce the cost to income ratio, whilst the same ratio for the Australian banks are still trending in the opposite direction. Excuse me. Now, KPMG recommended that following the example of these overseas banks, the Australian banks will need to target a step change improvement in productivity. And further simplification is important, such as efforts to reduce operating model complexity, to simplify and rationalise products and systems, which means decommissioning aged systems and applications, to have a greater focus on digital origination to reduce the cost to serve, along with further automation and digitisation of their workflow and processes in order to reduce manual intervention and improve efficiency. The clear signal from the European banks, indicated by KPMG, is that there should be an obsession with the digital mortgage. But the viewpoint mustn't focus solely on the digital features that the customer experiences and include substantial efforts to make sure the internal processes and systems are digital as well. Now, I think it comes down to this. Mortgage origination is a complex team sport. It's a lot like Formula One racing. And it's not just about winning one race. You need to be able to adapt and implement change throughout the season, even mid-race. The team's always tweaking the car, the software, the hardware, even the processes around the car, pit stop techniques, for example. You need the tools, processes, and people that can adapt to lots of different situations by implementing change regularly and reliably. In racing, you're dealing with all sorts of things like weather conditions, drivers' strengths and weaknesses, cars' strengths on different tracks, wear and tear, as well as changing regulations. And I'd suggest lending isn't that different. The requirements are changing every single day. The regulations, the community expectations, customer demand, competitive and market conditions. Many organisations have quite recently undertaken very public digital transformation programs. But I keep seeing signals that the investment's either going into the glamour projects, the digital veneers, or disappearing into huge big bang multi-year projects that have never quite delivered. And I suspect there's a real underinvestment into projects to implement the frameworks that enable continuous improvement. And no doubt there's been some improvements, but many origination processes are still held together with the technology equivalent of sticky tape and cable ties. Sequences of data integrations remain very complex, and it's almost impossible to automate the entire software delivery lifecycle from analysis through development through testing and deployment. Don't even think about asking for weekly releases. I think of it a little bit like an iceberg. of the people, tools, and processes that support your mortgage origination ecosystem, only a small fraction is visible to the customer at the very top. Customer interactions are intertwined with a series of services and processes behind the scenes across middle and back office teams, and the customer's rarely even aware of their existence. Like an iceberg, all of the mass is below the surface. But the biggest barrier to fixing problems beneath that surface is the inability to regularly and seamlessly deliver change to this complicated ecosystem. Now, since I've got a development background in a very large banks, 3 words used to strike fear into my heart: quarterly release cycle. In order to be good at something, you've got to practice. If I practice guitar 4 times a year, I'm not going to get very good. On the other hand, if I practice every day, every week, reliably and consistently, I'm going to improve. I'm going to find habits, tricks, and tools that make it easier for me, that make me better. Now, the software delivery lifecycle is exactly the same. If I'm executing a software release process every 3 months, the investment required to automate it doesn't make sense. So I persist with manual steps. And in my experience, that's where I see lots of mistakes. You end up with teams screaming at each other, and the business wants to do even fewer releases so that they get stability. And the releases get bigger and bigger, and as a result, even less successful. And I think this is at the heart of many of the trends in software over the past 5 years. All this talk of agile, DevOps, and digital transformation. Really, it's about building a culture of continual improvement and to practice the execution of change. So how can I tell if I'm building a digital veneer or building a digital mortgage? Well, I'd ask myself a few key questions. Firstly, how do all the participants involved in managing my ecosystem engage with each other? Do I need to create huge documents that outline the requirements? Writing documents so someone else can read and interpret is a hugely analog process. Users talk to business analysts who write a requirements document for developers. Developers take that, interpret the requirements, they write code and test it based on their interpretation. Often a testing team will come in after that, read the requirements and test the code based on their interpretation. And finally, the users get to test the system again at the end. Second question I'd ask is, are you frustrated by an inability to make very minor changes very frequently with really little fuss, but still maintaining a high level of quality? It surprises me how often I hear of organizations that can't regularly and reliably implement minor changes, and instead users end up implementing workarounds on workarounds on workarounds, and the only result is more and more hidden complexity that will at some stage most likely go badly wrong. The third question, do I have those manual workarounds that stay in place for years? If so, it's probably a symptom that it's much easier to put in place a process for dealing with an issue than it is to solve for the underlying root cause. The fourth question, is most of my development and testing throughout my software delivery lifecycle mostly manual? Can I, in fact, develop and deploy changes mostly automatically, or are my suite of tests still largely manual? As mentioned by the KPMG report, legacy systems are extremely costly to maintain. So it's important to ask, does your organization make it possible to decommission legacy systems? Because eliminating those legacy systems is a critical step to simplifying your estate of IT systems. And to successfully do this typically requires a good software delivery lifecycle that supports that continual improvement. And the last question I'd ask is there lots of unstructured data hidden amongst the structured data? I've been surprised at how often I talk to lenders that have implemented an early version of LIXI 15 years ago and haven't updated to LIXI 2. And they've incrementally built upon that first iteration, which had many gaps. And in order to overcome the gaps, many of these implementations embed unstructured data within the structured LIXI message. In some ways, That LIXI 1 implementation is a veneer of standardization. But the reality is that the lack of true standardization in those unstructured components is an absolute nightmare for an IT team to maintain and is a huge barrier to future change. So I'd suggest if you answered yes to any of those 6 questions, I'd challenge you to consider whether you are developing a veneer of digital features rather than truly digital mortgage supported by a digital organization. And I draw a direct line between that and the challenge that I mentioned at the start that our members have with efficiently and reliably executing frequent change. So, why does all this interest me as CEO of LIXI? Well, LIXI is fundamentally, at its core, here to enable the truly digital organization to participate in an ecosystem of providers that participate in the delivery of a credit product. We've got a really broad community of participants actively moving towards our suite of LIXI 2 industry-wide data standards. And it's a great way to reduce ecosystem complexity. And that's critical if you're going to start to tear down the barriers to change. I don't have multiple providers of roads to my house. I have one road, and it's designed for many vehicles. Cars, bikes, buses all safely navigate the road, whether they're delivering people or loads of turf or all sorts of different uses, but with some basic parameters, some level of standardization. And that standardization actually supports innovation. New types of vehicles come along, like Teslas, and they can just slot into the ecosystem with relative ease. Now, I see LIXI's role in a very similar vein. Our modern data standards simplify the delivery of data through APIs in a complicated ecosystem. LIXI 2 is great for building that straight-through processing using a single data model across a wide variety of products, transactions, software providers, and partners, including residential mortgages, commercial mortgages, consumer loans, credit cards, lines of credit, business lending, asset finance, leasing, invoice financing, deposit products. One data model covers all of it, which is brilliant if you're trying to get a single view of a customer. And it's not just the electronic lodgement, it's everything from A to Z, including the account variations. So LIXI 2 fundamentally lowers the complexity of your internal and external ecosystem, which enables a step change in automation. As a result, if you use it consistently, it can dramatically increase your capacity to execute change. So addressing tomorrow's regulatory update or next year's digital verification process just becomes part of your business as usual process of continual improvement.